the federal funds level are doing or not. Now, when bond yields go up, the value of bonds go down. Why? Because if it goes up to 6%, that means that the Treasury is working. They need someone to buy the bonds and people aren't stepping up at 5. So the bond value goes down. Now, if everybody's stepping up to buy bonds, the yield offered go down. It's like an auction. Think of an auction. If everybody's willing to pay 5, like a lot of people are willing to pay 5, then the Treasury is going to start offering 4. They're going to say, oh, well, if everybody wants 5, let's sell some at 4. And if nobody wants to buy a 5, it'll go up to 6, right? That's my point, is basically that's how the inversion between yields and bond prices work. Nasdaq's down 1.6% now. S&P, I'm watching to see if this 38.2% retracement comes into play. Could happen today, could happen tomorrow. We'll see. Russell's down 1.8%. Nikkei's down. China's up. And guys, we got Chris Pulver in the house, so we're gonna transition here. I'm gonna say hello to Chris for a few minutes, and then I got to run. But we'll switch over here. We got another quick break. Last thing I'll say before we do this break is we're doing an Edge Finder giveaway. If you guys would like to join the giveaway, we'll drop the link here in the chat to enter your name for a chance to win a free copy of the Edge Finder. We're announcing the winner on Friday, so stay tuned. We'll be right back.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
All right, he's here. It's been way too long. Hey, Chris.
I know.
How's it going, man?
What's up, man? Safe travels. Nice to see you back in the studio. What's up?
Yes, it was a wonderful trip. I texted you a little bit about it, but lots of great wine. The bread, very good bread over there.
Yeah.
And for those who don't know what I'm referring to, I was in Greece for my sister's wedding, and it was a trip of a lifetime. Really, really fun. So good to be back with you, though, Chris, and for a big day here, right? Big swing to the downside for the indices. And before we get started with anything else, I mentioned this earlier, but can you confirm you've got good sized positionings in China, right?
I do.
Good for you.
For sure. Yeah. So I am long Alibaba, Baidu, FXI, KWeb, and JD. Those are my trades. They're in my watch list. Yeah, I mean, P&L wise, it's been a great week. And there's still, I mean, there's more. I think that we have to, we've got to expect some type of pullback. I mean, Alibaba with yesterday's price, I mean, I had said that I think bull flags would be the best thing to look for. As opposed to, this big crazy 20-30% rip to the upside and then it fades the entire move. Obviously, that's more of a problem than a good thing. But when I look at the charts, I mean, having this move just kind of be waiting and building, and then it just erupts, that was a good thing. So what I'm looking for is if this eruption move is not just hardcore faded, but rather it pauses, like having a move up in a pause gives a bull flag potential to have more continuation. I'm not super greedy here when it comes to where I'm willing to get out of the trade. I mean, if Alibaba can come back up to the same high, or my symmetry would be great, fine. I mean, if we have a bull flag and it pushes up again, I'm probably going to take some profit. I've been looking at this as like maybe 1 to 3 months of holding. And I don't know if that's good or bad, but for me, as far as the timeline, if I hold for 3 months, that's essentially putting me into like the highest seasonality probability of the market's just going to find a way to melt up through the rest of the year. Yeah. There's all sorts of longs that go into the end of the year. There's destinations by December and January. And in the options market, especially, that's really important that we just see these positive drifts usually. And if China's a part of that this year, then I think that's a good thing for the global economy to have, China rallying as well as the U.S. rallying. But we're starting out October to a little bit of a shakeout here in the U.S., which it's not a big deal. Like, what do you expect here, Nick? I mean, we can't just keep making all-time highs every single day. So we're having a little bit of sideways movement, but China's been great. I'm not going to lie. I still got upside. I'm repositioning. My favorite one is, I mean, I own shares in Alibaba. I own shares actually in all of them except KWeb. KWeb is just options, but I
Mhm.
have shares in all the other ones. And so from that standpoint, it's been a good run so far. And I'm still looking for, a lot more upside. But like I said,
And
1 to
do
3
you have
months, calling it
upside capped on some of those positions? Like, do you have like sell calls on them too?
one of them.
Okay.
I think it's Baidu. On
Okay.
Baidu, I am capped around the 115 is my lowest covered call, and then the other ones are 125s and 135. So let me double
Okay.
check that here. If I go Alibaba, I have nothing covered on Alibaba, and then on Baidu, I am covered at 125, 130, and 115. Yep. So like I said, so those are my covered call levels, and those are out to the end of the year. I probably won't roll those because I don't necessarily want to go out farther in time to get
Mhm.
the credit. So
Okay.
I'm good with it right now, and I'm willing to also, if it hits like 130, 135, 140, I can also just take it as is. Like I've already maxed my profit from. I mean, I bought the shares in like I want to say I bought the shares in like the 80s.
Yeah.
My break even on Baidu is probably like mid 80s, high 80s, and I mean, if I cap it at $40, it's like that's still a pretty good run to make some profit.
Yeah.
So I just don't want to get greedy. That's all.
Well, definitely big congrats on the China play. I wish I was with it. I was on FXI for a while and I'd made some good money, but
Yeah,
dang, I wish I had it right now because my goodness, FXI is making a serious move. Fortunately, though, I did make some good money on the silver run up due to that. I
yeah,
did get taken out for a profit on that move, but the big burst in China, I think I sent you some info on my silver trade, which went really well too. So I was able to make some profit off that move. So we'll see if it continues. Chris, I got to run, but I'm sure that we've got more sessions together, especially this week. We got NFP, we got
yeah.
all sorts of big stuff. So I'll let you take over the show here for a little bit. Before I step out, though, also guys, we launched a service this month, or actually, I'm sorry, last month. It's October now. September, we launched a service called the Pulver Alert service, which allows you to tap into every trade that Chris Pulver is taking. He shares super active amounts of trades inside of our Discord channel, and we got a nice discount available to you guys. That is a partnership up between Chris and A1 Trading. So if you guys would like to get access to the Pulver Alerts, get access to them now. You can get every trade Chris has taken. He's trading everything from corn futures to freaking gold to Nvidia to literally everything. So if you'd like to get all of those notifications sent to your desktop, that is a service. If you're an existing member, you get a discount. If you have any questions, you can speak directly to a member of our support team. We'll drop the link to that here in the chat. And there's my blurb. Chris, you got it from here, man.
All right, thanks, Nick. The only thing I don't trade is I don't do sports betting and I don't bet on the election because I know that
Uh,
stuff's all happening right now. So I
smart
just stick to
man.
the markets. Yeah.
Yeah, smart man. All right. See you, Chris.
All right, thanks, Nick. All right, everybody. So directionally, a couple things to watch. We've got some gamma levels kind of popping up all over the place. Directionally, we came right out of the gates with a downward move. We took out yesterday's low. I've got some put option volume sentiment that's far greater than the call option. We are pulling back a little bit, but the futures market just tanked this morning, right at opening bell, and you can see that the S&P did as well. So what I'm watching here is I had a session earlier this morning. I'm looking to see if we have a yesterday's close was right here. We came out swinging with a very aggressive, 5-minute candle. We took out yesterday's low. And so what I'm going to be watching for is if there is a way that this low, let's say price can come back into kind of the center price of the open to the low. If we come back into the center for the day, then I have a good opportunity to still collect some premium and do something on the SPY or the SPX this morning. But with this type of direction that we're seeing right now, if this is breaking the low and this is just falling, breaking, and falling, that's a big directional day. And this is why I've added hedges. The trades that I'm in to the downside, I have a hedge on MES, which is a futures trade. That's micro E-mini futures on the S&P, and then /MNQ, same thing. So if we have a huge directional day on both of those, I might actually look and see, am I getting some profit on both of those yet? Do I need to see lower levels? Ideally, I can take a look at those right now. I know I put in an MES trade yesterday. We talked about it. So I did a 56.80 long put and I did a 56.70 long put, and I can check on those right here. So let's see how those are doing. MES, those are January, February, so that's different expiration. Here's the MES, this one. So my 5680, right now it shows that I'm up on the day about $1,260. And I mean, that's on like multiple counts. So I mean, this has to be like maybe if it's up to like $4, $5, $6,000, I'll probably end up taking some profit on it. Let me check just one account and see where I'm at. So one account, I'm up about 180 bucks on the day. Is that enough to say that's a good enough hedge for me? No, because I've got plenty of time in the trade. If we go to the price feed on MES, and we're going to see from these all-time highs that price is fading back down a little bit, and just there's easy structure here. If you go to the 200 EMA, we could still see price making a run for the 200 EMA. We could still see price making a run for this August 5th low to that September post Labor Day low. If price just pulls back into like the FOMC levels, fills this gap, something like that, I'd be happy as like a hedge just to get out of the trade. So for that trade, I when I put the trading yesterday in the alert service, I paid 175.75 for it. And so if I can close it out at like 350 to 450 or $500, let me see what it's trading for right now. So right now I could close it out around 215. I mean, that's not a huge profit. That's about $40 out of 175. You're making about a 23% gain, which is decent. But I'm looking more for like the 50 to 75 to 100% gain on a hedge, because it's to me, it's calculated risk. I'm willing to put in the 0.25%, the 0.5%, and go after a reasonable hedge and see if we get there. So chart alarm is set, watching our levels. We've got some gaps. If the market pulls back, that's totally fine. I hope that it does. I know that today we had manufacturing PMI that came in a little bit softer than expected. 47.6 expected, came in 47.2. The JOLTS job openings came in higher than expected by around, I guess, about 400,000 jobs. The ISM manufacturing prices came in softer than expected, which, couple things. I mean, the market needs to see good data. Okay. So today's price reaction doesn't necessarily show good data, but I'd say that the manufacturing PMI has always been, since December of 2023, we've been below 50. That shows that manufacturing sector is contracting. You go back to the graph here. So here's where we went sub 50, December 2022. Oh man, it's even longer. So we've, for almost 2 years, we've only had one positive push. And surprisingly, that was April of 2024 when the market was down 6 to 8%. Our PMI numbers actually popped above 50, but that's lagging data. So point is, manufacturing PMI has never been impressive in the US, and we're below 50 and have been for a while. Thursday, we have the services PMI. So tomorrow we have the AD, which is the ADP, which is precursor to non-farm, forecast for 124. Pretty quiet from there. The ADP comes out at 8:15 a.m. And then Thursday, another round, 8:30 unemployment claims, and then ISM services PMI at 10 a.m. and see if that matters going into a non-farm payroll week, which is Friday. I think the big thing for non-farm payroll is going to be 4.2. This is the expected unemployment rate. If it comes in higher, it's probably not a good thing for the market to see. Comes in lower, that's probably a good thing to see that the 50 basis points cut the Fed did is at least stalling the trend that we've been seeing with the unemployment rate went from 3.4 all the way up to 4.3, and it did it in about a 9-month period. That's how the SOM rule got triggered, right? Which is supposed to be this undefeated recessionary indicator. We have the disinversion of the yield curve, which is this undefeated recession indicator. You just don't have an exact timeline on that. So it's a weird situation where all these things could be pointing towards trouble ahead, right? But with the 50 basis points cut, plus the Fed looking to cut another 25 to 50 basis points, it's likely going to somehow stabilize. And what we have to get through is, don't disappoint on the employment side. Don't disappoint in the inflation side. Don't have a ton of election drama. Don't have disappointment in the earnings season, which is kicking off here next week. We only have like maybe 20 or 30 earnings this week. It's pretty quiet. So we had 14. Nike's a big one today. I noticed my Nike position. I already closed out for profit. I don't have any exposure on Nike right now. I had a ratio spread that I took profit on. And that's it. And everything else is pretty quiet for the day. So for the rest of the week, we only have 9 more companies reporting earnings. You go into next week, gets a little bit more noticeable as we not the numbers, but we start kicking off with the financials. We have PepsiCo for kind of consumer staples, but then we get into Wells Fargo, JP Morgan, some of those financials. Let me go into Friday. We have BlackRock reporting earnings. We've got the Bank of New York. We've got Wells Fargo, JP Morgan, Delta Airlines. Ooh, interesting. Delta Airlines on Thursday. Domino's Pizza, that'd be one I might keep an eye on. So, all right, we got some earnings plays getting sprinkled in 7th, 11th. And I think the big earnings season is going to be kicking off on the 14th to the 18th. Yeah, look at that. So on the 15th, we got 672 companies reporting earnings. It's a needle in a haystack, but we've got Tesla earnings on the 16th. We've got Netflix. Like, guess what? We're going to be trading some earnings together. So if you're interested in the Pulver Alert service, we've got the link posted in the chat. I will be taking a lot of trades through earnings season, probably I'd say 20 to 30, most likely. Trade the Mag 7, trade the high volatilities, trade some of those semiconductors, combination of buying those options, selling those options. I'll see how they're priced out. I try to make it as routine and mechanical as possible. I don't just, hey, I'm going to go long. It's like I trade options in like a probabilistic way. I've had pretty good run the last 3, 4, 5 years. Like most of the trades I take are winners. They're not all winners. Like I took a trade where I was profitable on the Qs, profitable on the SPY. I took a small loss yesterday on Nvidia, but I added a hedge. That's down to 102. Let me see what actually Nvidia is doing today. So Nvidia is down to 117. I'm not saying I'm happy that I got out of Nvidia, but it did save me about $5 of risk, and so I took a small loss of about $3. But I made profit on the Qs to like $2.50. I took a break even on the SPY, so that kind of washed the positions overall. But if Nvidia ends up getting down to the low 100s, and this is a 102 checkpoint, if we get down to this level, I'm going to see what my Nvidia trades are right now. Again, they're probably not super profitable, but if price is falling aggressively, I put in the 102 long put. I've got some ratio spreads when we had that August 5th bottom. I would own Nvidia, at really low prices. I'd own it at 75. I'd own it at 67, which I doubt we're coming that low. But right now, I'm up about $234 on my hedges for Nvidia. So right there today, I've already made up for most of my loss between QQQ, SPY, Nvidia, plus this Nvidia hedge. I'm already up like $250 net profit. So I want to see if there's more in the tank. If we go lower on Nvidia, let's say we have this discussion, we're at like 110 or 109. I might look at taking profit if my Nvidia hedge is up $500, and I'm good. I'm not looking to be greedy, but the trade was: are we going to come down and revisit this low? Are we going to find this 200 EMA? Which, by the way, this is a way more overextended chart than the S&P. I like this 200 EMA. This goes back 426 bars on a daily time frame. I would be very confident in saying that Nvidia is probably going to find this 200 exponential moving average before we make new highs. That would be if I'm just going to make a forecast and kind of proclaim, I think that we'll find this 200 exponential moving average before we make new highs on Nvidia. So that is why I'm taking the hedge the way that I have it. It's pretty inexpensive. The 102 was my long put, cost me a couple $100, and it's already up. It's probably almost close to 100% gain right now. Maybe not. What did I pay for it? I paid $1.95, and right now, because I'm in 3 contracts, it's probably only up like 60 or 70 cents. Yeah, so I'm up about 60 to 70 cents, which profit wise, let's say we're up about 70 cents out of 195. I'm up about 35.5%, give or take, which is fine. But for a hedge trade, I'd like it to be higher. I'd like it to be, 50% profit, 100% profit, 150% profit. I don't have a cap on the profit. I'm not selling against that. So anyway, I'm just going to let that run for a little bit and just keep an eye on price. Okay. All right. What else do we have here? So let me just go through the list. Let's go top down. We'll do some currencies. Currency strength chart, a little bit wild and crazy today. Japanese yen was super weak, and now it's at the top of the food chain. You got the New Zealand dollar at the bottom of the food chain. The Aussie dropped right out of the gates at opening bell. CAD is up as well today. Dollar and Swiss. So we have some risk off flows. So I'd say risk off flows at the top when you have Japanese yen on top along with the dollar and the Swiss. So those are your, risk off currency pairs on top today. You have New Zealand, pound, and Aussie on the bottom. So definitely some risk off flows. You can see that illustrated by the direction we have today. This is sliding all day. You look at the futures market this morning. I mean, we have just smashed it opening bell. This is ES, so this is your E-mini futures for the S&P. Just, I'm not going to say crashing. I dislike it when people are super, like, I guess using like hyperbole, or just like, oh my gosh, it's crashing, it's ripping. It's like it's moving like half of 1%, but it is a straight line. I mean, we have dropped around 70 points or so on the S&P for the futures market, but on the Nasdaq it's dropped way more. Here towards like 2250 to 9. I mean, we've dropped 300 points on the Nasdaq. So, in the Nasdaq is way more volatile. If you ever trade futures like NQs or MNQs, you're getting about $20, $20 per point on the Nasdaq futures, about $2 a point on the micros. But it adds up when you get 300 points. I mean, if you somehow got this trade and grabbed 100 points out of that, you get $200 on a micro contract. If you get 100 points on a full, you're getting, it's $2,000. Like, it adds up quick. But what a crazy move it was right out of the gates. So anyway, am I trading every day? Pretty much. Now, if I'm not actually placing trades for the day, I'm doing portfolio management. I mean, I can show like all my positions here. So if I take a look, I'm always kind of going A to Z through the portfolio. Oops. So I go A to Z through the portfolio, check on things. I think I could probably take some profit on all the Yum brands. So the 32, 30, and 27.50. That's up about $750. Is that all I have left? This account right here. Let me check something. So Yum brands, this one, $30 and $27.50. That's up around $755. Let me see what my total was here for Yum. I'm going to close this one out. That's all that I have left. So that account, I'm going to take some profit. Let me see what my tracker is. Yum C. So 310. So I've got 310 credit, and right now it's trading for 64 cents. For me to sit on this trade through January 2025 to grab an extra 64 cents, probably not worth the risk when I can just keep the capital. Although the probability right now is, I mean, these are all trading for like a 95 to 97% probability that these are not going to get tested. I collected 310. Let me see what this profit is. So my max profit's around $930, and I'm showing that I'm positive about $750. So what's that profit? So 750 divided by a max profit of about 930. Oops. So 750 divided by 930. I'm up about 80.6% of max profit right now. A little bit more time does help. What's left in the trade? So let me see what these are closing for. 65 cents, I said. Okay, so if I can close for 65 cents, what would that be if I do 0.65 times 300? Yeah, another $195. Let's see. That will, for that account, that's a margin account. I'm not really worried about the buying power, although I will, if I close this trade out, let me see if I can close this out for like 65 cents. I'll free up about $7,000 in buying power. I'll take about $750 in profit. I think it's worth it to just get out. Oh, hang on a second. Gotta let my buddy in the golf lodge. Give me a second. Okay, he should be good. He's sitting at the front door. I have to like fob him in. All right, I got to just keep an eye on my phone. Sorry. Okay, so is it worth getting rid of the trade for an extra $195 is my max profit, or take the profit now? Let me go back to double check the position. So the only account that has this, I think it's worth keeping the buying power. I'm going to go ahead and get rid of these trades. 1, 2, 3. Okay, here we go. Open sesame. Okay. Okay. All right, he's in. Sweet. Let me take this profit. Let me see. So I'm not going to take less than 65 cents. I'm already tapping into my profit a little bit here. So if I go 65 cents on the mid price, now remember these are all sell puts, and so together I'm hoping I can get filled with the mid price. If the market's asking me to take the ask price, I'm not that interested because I have to buy these back. And if the market's like, oh, you're going to buy them back in the mid price, or I'm sorry, the ask price, I'm not wasting, 50 cents to get filled at $1.15 when I'll just let it decay with a 95 to 97% probability. Right. So let me see if I can get out of here for 65 cents. Easy. All right. That was easy. All right. That's fine. So that was a total of 310 collected. 310 minus 65, so 245 on 300 shares. I just made $735. Okay. That also freed up some buying power. This account went from 150 to now 158 in buying power. Not too bad. So to the question of, you trade every day. Yes, it's usually like combing through the portfolio A to Z. And then I also go to my expirations to see how many days left I have. So Pfizer, for example, I have some shares of Pfizer. I've got some covers at 29.50. This has been a diagonal spread that I'm continuing to massage. I will probably do, let me see what my Pfizer break even is. Pfizer break even is, let me check the numbers here. I've got a break even at 236. Okay, so 10-4 expiration is this Friday. 2.02 from the 25. So I have a $25 long call, $25 plus 2.02. My break even's 27.02. More than likely what I'll do, and I might do this now. Let me see what these covered calls are trading for. 29.50, trading for 4 to 5 cents. It might be, so two ways to look at this. I can either wait for the rest of the week to make an extra 5 cents, or I can try to do a quick roll for a week and get myself a net credit and just roll it right now. So let me take a quick look at this. If I roll this, so I'm long the shares, I'm long a call, and I'm selling against that call to create like this diagonal spread. Let me see what I can do with this 29.50. It's basically already decayed by I mean, let's say 90% of it. If I can roll this out, let me do a quick roll here. So if I roll it out a week, I can get 12 cents. Do we have any earnings on Pfizer? Earnings on October 29th. I don't really want to get in front of earnings. I'd like to get it called away before earnings if possible. So if I roll this out, let's go down to 29. I can get 30 cents credit, although I'm sacrificing 50 cents of profit. Roll out a week, I get 12 cents and keep the strike price where it is. If I roll it out another week to the 18th, that's before earnings. The 25th is also before earnings. What was this one? 11 cents, 19 cents. So I could roll this out to the 25th, earnings on the 29th. And, I could actually roll it up. Ooh, not bad. So I could get a net credit by rolling it up by 50 cents and rolling it out right before earnings and still grab an extra, this would be $200 of extra profit if I'm right. And I also get an extra 50 cents on top of that. So let me just do the math on this. If I did this trade, 2.02 minus 19 cent credit is 183, and it gets called away. So gets called away at $30. I get 317 on 1,000 contracts. So I'd make 3170 if PFE gets above $30, and that's before earnings. Yeah, we'll see. That's not a bad trade. I've probably lowered my cost basis by I want to say, I mean, $2.20, which might not seem like a lot, but I've saved myself about $2,200 on Pfizer by just lowering cost basis, thanks to earnings. Yep. What kind of trading is this? Center for Ants. Do you calculate intrinsic value and volatility? Do I calculate intrinsic value volatility? I mean, I keep track of like my deltas for the most part. I mean, if I'm taking trades that are like delta neutral, I keep track of my some of my Greeks, like my delta and Vega, things like that. But usually I just track my break even. So it's like it is all purely based on intrinsic value. Because if I know my break even and I, am collecting credits, and I know that's the most important thing is what's the price that I need things to be at for me to be profitable. And Pfizer's a good example. I mean, my break even has gone from a $4.20 debit all the way down to $2.02. And so if I lower it by another 19 cents, brings me down to like $1.83, $1.84. And after that, it's just continue to chip away. So, I mean, the fact that and this is one way you got to think about options. And I'll do some analysis stuff here. But if I had Pfizer initially, I have the ownership price, and let's say my break even is, so I buy, so my $25 long call has a break even at 29.20. Okay. Now, because of options, I've lowered my cost basis, lowered costs to $2.02. Okay. So now my $25 long call, the break even is 27.02. So can everyone appreciate for a second what this actually does for my trade? Because if Pfizer actually just stays the same, I've lowered my cost basis quite a bit. I mean, that's lower my cost basis by about, 10%. So if Pfizer stays the same, I'm lowering my cost basis. If Pfizer goes up in price, rather than having this be my profit, right? If we go up in price on Pfizer, okay, let's say we go up here. Well, initially this would be my profit if I just buy and I hold. But because of options, I've increased my profit potential that much more. And if I lower my cost again, I can increase my profit potential that much more. And so what I'm giving myself is, and this is one way everyone talks about, like, beating the market, beating the benchmarks and generating alpha. This is one way that I do it, because the price can go sideways or even go down a little bit, go up a little bit. And as long as I'm actively working options against my core positions, I can increase my overall profit potential. And I do this on individual stocks that I like. I do this on the indexes that I own, the ETFs that I own, and that's really important. So even if I'm not actively placing new trades, I'm actively changing my cost basis on these core positions, because the goal for me is own it as cheap as possible, give myself all the upside potential. But even in the event that the price is going sideways, I'm actually still increasing profit potential by lowering my costs. Does that make sense? All right. So if that's weird stuff where it's like, I don't know, man, just place a trade. That's not what I do. I mean, there's a lot of trades I take. If you're in the Discord channel with the Pulver alerts, we're taking lots of trades. We've had some nice winners the last 3-4 weeks. But it's a combination of things. Like today, I passed on some of the morning trades that I typically take. Although I could probably get into one right now without too much harm. In fact, I think I'm going to try to look at one right now. Let me see. SPX here for the morning. We've kind of calmed down for the morning. It's 10:50. I'm going to look at a trade. Let me see if things just calm down. I'm going to place a trade right now. So anybody watching for my daily profit play, I'm looking at a trade right here for the day. If I center it around 5,700, I just want to make sure I don't get into the way of some stupid directional move that's going to just keep pushing lower. So I'll probably keep the stop and the spread pretty tight, just in case price doesn't cooperate. But I'm going to look at a trade right now. If I do the 5740, 5735, where's that at? Where's 5735? We got to come all the way back up to 35. That's a little bit, man, that's still not that high. All right, I'm going to try to keep it out of the way. So if I go to 5740 on the call side, and I'm getting 275 for that. On the put side, I can get the 5650, which is a 13 delta. All right, I'll try this. So if I do 40 and 60, 50, and 30, getting 335. I'm going to take this trade right here. So if I've got any daily profit play members, I'm throwing an alert at you. So daily profit play, SPX, 10-1 expiration, 57.40, and then 57.60, and then 56.50, and 56.30. So I'm going to see if I get 335 credit for the trade. $335 credit. Not filling. I'll try to get 330. 340. Come on, mid. 330. Let's go. 330 not filling. 325 final offer. Filled at 325. Okay. All right. So now that that trade is in, I'll keep an eye on that one. I'm just going to monitor my position. Let's go back to symbol. There's my SPX. 1, 2, 3, 4. And looking to close this out for hopefully a 15% take profit. Actually, let's do this. 3.25 times. Looking at a 275 take profit. Okay. $2.75 debit. And 100% stop loss is going to be 6.50 debit. Okay. So I'm in. I'll monitor and see if I can get a little bit of decay on the SPX this morning to take some profit. So what I'm looking at is there, price goes sideways. I'll grab a little bit of profit right there. Okay. Let's see here. I see your question there, WWW. So 100 shares of MSTR, average cost is 170. Sold a covered call last week for $640 premium. Contract will expire this Friday. Okay, let's talk about that. So you're in MSTR. So here's what's going to help me. What are the transactions that you've done? So did all you do is you bought the shares with your cost at 170? So you buy MSTR at 170.50. Yes? Now, when you say I sold a covered call last week for $640 premium, what's your covered call price? Even though MSTR went above the strike price, my shares did not get called away. Would you add more shares to lower the cost average? Wait a minute. You gotta walk me through this a little bit better. So it sounds like you did this. You bought the shares at 170.50. You did the 170 strike. So and you still had the shares, okay, and you still have a covered call. So let's do this. So against that core position, so you sell the 170 covered call for $6.40 credit, right? So based on this right here, if we're doing this correctly, you have a break even now. If you bought the shares at 170.50 and you took away $6.40 premium, your break even's 164.10. Okay, so if 164.10 is your break even, we're trading at 161. One thing I would do on MicroStrategy is the premiums are really solid for this stock. I mean, you can get, if you're at the money, you can get $5, $6, $7, $8, sometimes more. I'll go to the option chain and show that. So if I go to MicroStrategy and knowing that my break even would be 164.10, I'll just treat it like it's my trade. So if it's 164.10, if I went out to this Friday and I do you could do a 160 strike. If you're trying to get out of the trade and just repair it, these are all filling up here. Watch. So if I did the 162.50, so my break even's 164.10. Let's say that I sell the even the 160. Look at this premium stuff. That's not, remember. Sorry. I'm on the put side, call side. For 162.50 or 165, look at the 165. 165 at least gives you 90 cents break even, but you're taking away another $4. Everybody see that? So if I did the 165 at $4 credit, And that's for this Friday. If price just gets back of 165, take away 410. Now your break even is 160, gets called away at 165. You turn that into a $500 profit. So that's not a bad trade. And I would stay, if it's my trade, I would just stay close to price. I would stay close to your break even. I mean, you're getting for 1 week expirations, you're getting a pretty ridiculous amount of premium, right? So a 165 covered call for this week would give you $4 of credit, a 162.50. So if you had the 164.10, take away the if you did the 162.50, you take away $5.10. Now your break even's 159. If it gets called away above 162.50, you still make $3.50 on one contract or whatever you had share wise. You still make $350. So in my opinion, if that's my trade, it's not a hard one to repair. It's not a hard one to repair. The premiums are really solid. And I would be pretty confident that over the matter of 1 to 2 weeks, you can lower the cost basis by, $8, $9, $10. And I mean, you've already gone from 170 to 164. That's an impressive chunk out of the break even. Lower it by another $4 to $5. If it gets called away, you repair it for $3. Repair it for $5. I think that's an easy way to, if you've got the buying power to hang on to the shares. That's the other thing is obviously if you're owning the shares, MicroStrategy it's not $1,000 stock like it used to be, but it's going to tie up $16,000 in cash or $8,000 in margin, which is pretty high. But I think it's an easy trade to repair or pair to a trade. But yeah, pretty easy. Does that help? Does that make sense? So if I'm in the trade, that's what I'm doing. Okay. Any other questions on that? You good? Okay, awesome. I also have some MicroStrategy. I don't think I have shares of MicroStrategy. Let me double check here. I know I have a bunch of credit spreads. So I'm going to put Pfizer on my to-do list today. I've got to comb through the portfolio. Pfizer's definitely on the to-do list. I've got the SPX trade that hopefully is going to take some profit. That should be looking better. SPX right here. So my 325, need a little bit more decay. Come on, price. And then MSTR. So I have an 100 by 95, 65 by 85. I got some naked puts. I got some ratio spreads. I got all sorts of creative stuff going on here. So credit spread, the 100 by 95, and then a 112, which is what's this one here? So look at my expiration. So I've got a 111. That's a bear put spread, and then a naked put. I'm happy owning the shares at 65, and then an 85 by 80 for ratio spread. I'm willing to own the shares, under $100. They're likely not going to get called away. I'm up, around $650. I'm up like $5,000 on all of these accounts on MicroStrategy without any ownership, and then I also have some income trades. So I mean, I might not own any shares of MicroStrategy, but it's not a bad one to consider. I don't know if I want to buy it now, but if we come back to like 120, 125, I'll probably take some shares. Okay, Nike earnings tonight. Yep, that's a good point. I've already taken my Nike position off. We're sitting at the daily 200 EMA. When Nike dropped off of this earnings report, I did some ratio spreads and made like $350. And I'm out of the trade. So I don't have anything on Nike right now. The earnings play, it's a bit of a hit or miss. So Nike, because we came back and kind of filled this area, it's a coin flip. The expected move on Nike is only like $4 or $5, so I don't think it's a good one to necessarily trade on earnings. But it's going to be interesting to see, like, Nike has a new CEO, and are they going to get a good earnings report or bad earnings report? I'm not sure. So if I go to Nike, we're looking at an expiration for this Friday, earnings today after market. We're only looking at like a $6 move. I mean, if I want to see like, okay, it's $89. If I buy a call and I buy a put, the broker's asking me to essentially pay for the entire expected move. So if I bought this for $6.50 and price moves $10, great. But the expected move implied move is about $6.07. Now, what I can see really quickly before I go is how much is the expected move percentage-wise on Nike. Let's find out. Average move is about 13%, which means we could go up to like $8 or $9. Not a bad trade, honestly. So I've got 9, 7.5, 9. Let me see how many times it's hit at least like, what's 9% of 89? Let's go 88.92 times 9%. So an $8 move, and I'm paying $6.50 for it. But I don't have any cap. If Nike, has a big surprise to the upside or big surprise to the downside, then great. What I could do is, I don't know. I might actually price this out, and if I like the trade, then I may add this to my Pulver alerts. So that, let me see how many times it hits post earnings. So here's what I'm looking at. How many times does it hit? So what I'm looking for is how many times over a 5-day period do we get to at least like 9 or 10%? We get one there. We don't get one there. We get it there. We get it there. We don't get it there. Don't get it there. We get it there. We get it there. We don't get it there. And we don't get it there. So in classic earnings fashion, 5 times we do and 5 times we don't. So what does that tell you about earnings? A lot of times it's a coin flip. But when it does hit one way or the other, it's a big hit, like hitting, 10, 11, 12, 13%. That makes it worth trading. So if I were to take that, I mean, I could probably do a Nike trade for like a $4 to $4 debit, $4.50 debit. So don't be surprised if I post something today on Nike with earnings coming after market, and I'll probably put an expiration out to Friday. So, all right, everybody. I've got to bounce. I've got another webinar here in just a couple of minutes. So I hate to cut it off. I know that usually I will talk until 11:30, 11:45, but today, unfortunately, I got to have a hard stop here in just a minute. So I know we did get a chance to go through like top down. Markets are down, stalling a little bit this morning. ISM manufacturing numbers came out today. Tomorrow, pretty quiet. All you have for Wednesday is going to be your what? What's Wednesday? Is Wednesday ADP? Yeah, ADP non-farm. Thursday, it's another services PMI number, and then Friday's non-farm. So there's going to be enough to rattle the markets a little bit this week. October starting off on a bit of a rough note, just kicking things off with a little bit of a downward move. Barely broke yesterday's low, but we'll see what price does for the rest of the day. If it just kind of stabilizes, hangs out, that's fine. But I'll let you go. I'm going to hop into another webinar, and then I will be back on my live session again at 3 p.m. Eastern time today. I go live almost every day at 3 p.m. on my YouTube channel. That's a final hour session. We just kind of talk shop and recap the day. But I will look for a Nike trade today. If I post that, I'll post it in the Discord for my Pulver alerts, and I'll probably end up taking. I like Nike. I think the percentages are good. The post earnings are good. And if I can take something for like $4 to $5, expecting maybe an $8, $9, $10 move, that should be enough to get us a nice profit. And we'll talk about that. Okay. A1 team, thanks. And we'll see you tomorrow.
Thank you for watching today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. We're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. You can fill out an application with the link in the description below. That's all for today. Trade safe, and we'll see you tomorrow.